Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KEYMED BIO-B interim report. KEYMED Biosciences Inc. offers a diverse range of biotechnology services and products. The company's main focus areas include autoimmune and oncology therapies. Some of its key business and service offerings include product development. KEYMED Biosciences is developing various biological therapies, including CM310 for atopic dermatitis and seasonal allergic rhinitis, CM901 for gastric and solid tumors, and CM326 for chronic rhinosinusitis with nasal polyposis. Clinical trials. The company conducts phase I to III clinical trials for its product candidates, including CM313 for systemic lupus erythematosus and primary immune thrombocytopenia, and CM355 for lymphoma. Antibody development. KEYMED Biosciences develops recombinant humanized monoclonal antibodies, such as CM326 and CM383, targeting various diseases like asthma and Alzheimer's disease. License agreements. The company has partnerships with several organizations, including Bolinos Biosciences, Platina Medicines Limited, Prolium Biosciences, Inc., and Timberline Therapeutics, Inc., Research and Development. KEYMED Biosciences engages in the discovery and development of biological therapies for various indications, including autoimmune and oncology diseases. The stock price of KEYMED BIO-B has skyrocketed by 91.63% over the past year due to several key developments. Regulatory approvals for stapicibart injection, a treatment for seasonal allergic rhinitis, have been a major contributor to this growth. Additionally, positive results from clinical trials for various drugs, including CM313 and CM336, have bolstered investor confidence. The company's expanded licensing agreement with JMT Bio has also provided a boost. Furthermore, favorable market sentiment and analyst endorsements have contributed to the surge in stock price. Overall, these factors have combined to drive KEYMED BIO-B's significant growth over the past year. The primary drivers of revenue growth for the company are multifaceted and include various factors such as stapicibart sales, approved new drug applications, breakthrough research results, potential milestone payments from partnerships, tiered royalties on net sales, exclusive license agreements, upfront payments, and rapid advancement of clinical programs. These drivers have contributed significantly to the increase in revenue, with notable growth in overseas revenue, collaboration revenue, and sale of pharmaceutical products. In particular, the company's strategic partnerships, including those with Bolinos Biosciences, Timberline Therapeutics, Inc., Prolium Biosciences, and Auro Medicines Limited, have generated substantial revenue through upfront payments, potential additional payments, and tiered royalties. The commercialization of late-stage pipeline products has also contributed to the growth in revenue. On the other hand, the primary drivers of revenue decline are mainly related to a decrease in mainland China revenue, a decrease in trade receivables, an increase in inventories, and a decline in collaboration revenue. These factors have resulted in a significant reduction in revenue from certain sources, including licensing, out of CM901. The company is generating positive operating cash flow. This can be inferred from three key points in the financial summary. Firstly, on page 20, it is noted that net cash flows used in operating activities decreased by Rm 185 million, indicating an improvement in operating cash flow. Secondly, on page 39, it is stated that net working capital is positive, which suggests a positive operating cash flow. Lastly, on page 44, the company's operating cash flow for 2025 is reported to be 504,855 RMB0, further confirming the generation of positive operating cash flow. The company's debt level has experienced significant changes. Total liabilities and total debt have increased by Rm 144 million and Rm 117,708 respectively. Interest-bearing bank borrowings have also seen a substantial increase of RMB 548 million. However, the interest expenses on these borrowings have decreased from RMB 8863 in 2024 to RMB 7463 in 2025, indicating that the company is paying less interest despite its increased debt levels. The performance of various segments and regions in the company's financial summary reveals a mixed picture. The overseas segment stood out as a strong performer, with revenue increasing by an impressive 506%. In contrast, the mainland China segment struggled, experiencing a significant decline of 59% in revenue. On the other hand, the Hong Kong segment showed resilience, with non-current assets rising by 38%. These divergent trends highlight the varying fortunes of different regions and segments within the company. Management is optimistic about the company's outlook, citing strong potential in both oncology and non-oncology fields. Key strategies include rapidly advancing clinical programs for pipeline products, expanding manufacturing capacity, and exploring value-creative partnerships. Notably, recent research results have bolstered confidence in CM336, a product with significant expansion potential. The company is also poised to reap substantial payments from agreements related to CM313. Overall, management's strategy emphasizes growth through innovation and strategic collaborations. There were no notable acquisitions or divestitures in this period. The company's financial structure remained unchanged, with no significant additions or disposals of assets or businesses. The company's financial summary reveals that it has not distributed any dividends to its shareholders. Additionally, there is a lack of information regarding share buybacks, indicating that the company has not repurchased any shares in recent periods. That concludes the financial summary. For KEYMED BIO-B, feel free to comment below, and I will be happy to answer them when possible.